So happy Friday. In today's video, I'd like to do a little breakdown on the SPY. We're going to do a little analysis. It's not necessarily a prediction, but I just want to show you a couple of the trend lines and things I'm keeping an eye on, along with just some other levels that you may want to look at and just for your own personal benefit. If we look at just overall market right now, today the market is not doing so well. Again, I mean, it's kind of starting to pull back up a little bit from the down moves that we've had this week, but it's not anything serious or major push to the upside. So you can see we've got a mix of some red, some green. Microsoft's actually pushing quite well back up. Yesterday it was down, and then Amazon reported some earnings, so that looks pretty good. But a lot of the other things there got a little bit of a mix. So if we look at the S&P, or if we look at the SPX, we're up on the SPX up about 4 or 5 points. If we look at the SPY right now, because the other one's 15 minutes delayed, the SPY is up $1.26. So the S&P is up about 12 points actually. So when we start looking at something like this, markets clearly, let's just back into it with kind of the, let's go to a daily chart. And what I want to show you here is if we get rid of a lot of the noise and I even get rid of the pricing, what I have the pricing do is, or this moving average do, is when you see this moving average here on your screen, kind of with a green dot, it's saying the trend is to the upside. The moving average is actually moving up. When you start seeing it yellow, it's kind of flatlining a little bit, or there's a little, the formula is not fully calculated between the up or the down. And to the downside, we have kind of 2 or 3 down moves in a row. So what you're seeing is in the past, from April to about August, we've had an uptrend to the upside, really, on these spiders. And now, recently, we were getting a downtrend and another down wave and another down wave. So we're getting down waves with maybe 3 weeks of sideways action, then a down wave, then 3 weeks of kind of sideways action, and another down wave. Now, those sideways actions actually only appear on the moving average. Overall, you know, the market is still kind of trending down. So the sideways actions that you're seeing is really more on the moving average side. If you look at the pricing appears to be actually a little bit stronger, or appears to be bullish when we start doing something along these lines. Is that when we start looking at the price itself, it appears bullish, but really we're, from a trend basis, we're still going in downward. So anyway, the market itself has been weak recently, and that's going all the way back from August. And it started out from really, I would say, this bearish engulfing bar. So when you start looking at something like this, you've got this bearish engulfing bar right there that started the wave. And it was still trending up, and even a few days later, we continued to move. But then after that bar, we started to trend down. We popped a little bit, trend down, popped a little, trend down, might pop a little, might trend down again. So when we start looking at what's going on here, we are coming into some basic and general support. Here's a few trend lines that you can take a look at, but I'll kind of take a look at these here individually shortly as we go with time. So the first one I want to take a look at is this upward trend line right here, starting from back in June, that we had an upward move and then we had a support. So this is kind of like a head and shoulders pattern, and the neckline being broken. So what we have here is a resistance right up there. So coming in, the stock went down, came back to retest it, and rejected those higher prices. So this is one trend line to look at. The other one that kind of caught my eye was the previous support. If we draw this down in October, you can see for a couple days, this stock or SPY right here kind of held around this 420 level, bounced for a day, and then it rolled back over. If we actually draw that line even further, you can see there is a swing point right around February. That was very interesting. So there's also a few over here around May and June that played around there, kind of like playing, playing around. So we played around there and we came back, and that's where that support was. So supported it, came through, and broke through. So when you start looking at it this way, this one's kind of interesting. Now, this next part that's I'm kind of watching and looking at is I've got a couple of swing points that I'm looking at, and that's going to be right around this 410 level. So when we start looking at those areas and we back these things up, watch some of these swing points here that we have. And that's another one to kind of keep an eye on, because what's happening is that we are going down for a little while. So overall, we've been trending down and lower. But here's the thing, is that eventually a normal pullback, right? Even if we look for a general stretched market, like let's say you have a market pulling up, pulling down, a normal market then should kind of push up. Now, we could fully turn into a bearish market. That's not unreasonable, or that's not like something way out in left field. It is quite possible. But what I'm saying is that from a temporary basis, you are getting to a point where you could be looking at getting some form of bounce in a similar way that we've had the bounces right here and a bounce right here. So as we break down in this level, we could get this next bounce and then push and kind of roll through. So that's one way to look at it. The other way is that if this in total is enough to go to kind of this downside, then what we could do is, okay, now in the same way that we had this kind of A to B all the way, well, way down there, A to B, now we've got a B to C, and we could get a C to D pushing up. That's also possible. Now, that's a little bit of a longer term when you're starting to look at it. Let's go to maybe a 3-day. So what we're going is, okay, we've got this upward move. Okay, now we've got a little bit of a pullback, and now again, we could get a further upward move up there. So again, it's possible, but again, it just depends which way the charts pan out or the pricing pans out. It's you don't really know. One thing I will say is, as we start looking back, we've got some of these resistance levels right here, and then some up there from the highs. So when you start looking at this, you've got kind of this rounding area that's going on, and now after this move higher, here's the bigger issue that I see that could be a problem later on, is that when we start looking at this monthly, here's where things get a little bit interesting. Let's say we've got this upward trend. Well, if this upward trend now starts to break and we start trending down, we had this downward move. So look at those. That lasted a couple of years. It's possible that could happen. I mean, right now it's not something as serious of a discussion. But if we do start moving into this area, we could have kind of this sideways move, sideways market for quite some time, because we've had this big move up. We haven't had these other types of moves in a while. So if we look at kind of moving this over and start seeing, okay, well, what is the possible longer term projections? Well, if we're starting to see there's some issues in the world of jobs or in the world of economically, well, we could actually get a sideways market for, who knows, maybe 5 or 10 years. And that's also possible, because the market now trending up has been a lot of money printing. So it is quite reasonable to think, well, what if we get a 5 or 10 year, even let's say 3 to 10 year period where we just go sideways for that period to digest what we've got. And now as we look into this, we start backing up, and we go into kind of this monthly concept where, hey, looking at a chart like this and then higher is much more reasonable and rational getting into these further later years. So that's kind of looking and zooming things out in a much different or bigger perspective. But my point here is that overall right now, on a temporary basis, if we go back into the daily, this daily area, you are looking for a possible little bounce here temporarily. But on a long-term basis, the question is, hey, are we still more along the lines of getting into a bearish market? Maybe. For some people, they like that. Or are we going to start to reverse course and get back into some bullishness behind it? So anyways, that's what I want to share with you, is just some of this technical basis on the SPY. I haven't done a detailed breakdown on these. If you look at, in a little while, if you look at kind of Microsoft right now, it's pulling back up after this sell-off and gap. So you've got a few spotlights. And if we look at kind of the percentage change, Capital One Financial breaking out after this descending line. You've got Intel popping, Amazon also up about 10. W, it looks like starting to pop a little bit at around the 40, which is coming into kind of this support level. You do have earnings coming out on level 1 and AMD here as well. So There's certain stocks that are kind of holding their own, but I'd be a little bit more mindful. Anyway, so that's what I want to share with you. Truly appreciate all you guys when you write in the comments. Thank you for that. And feel free to write down your questions as well if you have some others. Don't forget to check out the Mastering Technical Analysis course. If you're kind of into technical analysis, just check out the Traders Fly website. And truly appreciate you joining me and continuing to learn and evolve. And I will see you in the next video. Take care.